All right, what's going on, everybody? How's everybody doing on this beautiful, beautiful Saturday? No, it's actually not. It's actually really gross out here. That's kind of why I'm doing it. So I was just doing some charts, and I figured I'd do it on live stream as well. That way, the posts, I'll be posting them as well, but you guys can hear thought process and all that good stuff following that. So this is gonna be really low key. I'm probably not gonna be taking many requests. I mean, if you have some that you really want to look at, I can do that. I am just kind of adding more names to my list. I think we cracked over 100 on my sidebar list, and of course, today, hopefully, I can show you guys how I kind of cycle through those to make sure going into the week that I have what I've deemed the best possible setups towards the top, and those are typically the names that I'm looking for throughout the week, whether it's Monday or whether it's Friday, right? If we're doing the work well in advance, I'm prepared. I'm prepared for anything throughout the week. So here is where are we? Let's get this going here. Yeah, compound interest. That's great that you have you're doing your own charts at the same time. That's the way to do it. Okay, so let me come on over here. Let's share the screen, and I'll start from the beginning here. I did get up to SoFi before I realized I should probably just stream this, but we'll get to that one in a sec. So anyways, yeah, basically what I do, and this is just how I'm identifying the highest probability in terms of successful setups, is just based on going from top down. So what does that mean? I start with higher time frames and I work my way lower, right? And you're going to notice along this sidebar here, where my mouse is right now, you'll notice I have a bunch of like green labels. I have red labels, only one red label this week so far, but I just dropped the green label next to it. That indicates to me that that's a bullish setup that I'd like to revisit at some point throughout the week. Just a few that I've already gotten. And look, this is not to say that I don't think NASDAQ is bullish, right? It's just, to me, it doesn't line up perfectly with my current setup, or the Manda model, the one that I trade, 80% of the time. So, which is fine. It doesn't mean that I can't trade futures this week because it doesn't meet all the requirements for me. It just means that my setups or my trades on smaller time frames are likely to be quicker, or not as prolonged. Like, I'm not looking to swing something on NASDAQ at the moment, right? So just to run through these that I've already done quickly, couple setups that really stuck out to me is the Russell. So you could also look at IWM for this one if you were into that type of thing. I look at the futures ticker. To me, if I have the opportunity to look at a ticker from the futures perspective, I'm most definitely going to do so. Why? For me, if I have additional information, that's a win for me, right? So I'm getting information for 23 hours a day, 5 days a week, charting a futures ticker, while if I'm looking at IWM, market closes 8 p.m. I have no additional data. Market reopens at 4 a.m., right? There's a lot of, two sessions in particular, the Asian and the London session, that are kind of not being accounted for. So it's just going to look like a gap. And for me, or for anyone who is trading something that can be either leveraged, that can be either, maybe you trade with some weight, right? You want to be as precise as possible. You don't want a massive gap to be your trade plan, where it's okay, enter off of the gap, stop loss below the gap, right? That makes for a huge range and could potentially enhance the risk that you have down on that trade. So in order for me to avoid that, I like to be as precise as possible, and you can be precise as possible when you're using futures data, because you have much more time and much more candles to work with, versus just a big old gap that you would have on a regular New York traded ticker. So, but anyways, here's what I got on Russell. I mean, right off the bat, this meets the criteria for me. So here's your low to your high, that shifted structure here and here, okay? By taking out this high right here, that is a shift in market structure, okay, or a bullish trend starting, okay? So from this point here, I map my range from my low to my high. You'll notice right around 50%, that's when we started to hover, and we were kind of consolidating for a really long time. Right now, I'm currently on the monthly chart. This is, again, just the process of me going from higher time frame down to low to try and pinpoint the best setups possible. Now, you will notice that we swept all of these consolidation lows. So all that's doing is building liquidity at this level. By building this liquidity and ultimately going below it, that's taking out that money, right? Liquidity, money, same terminology, okay? But by taking out these lows, those stops are getting triggered, creating more money to generate a move to the upside, right? If you trade like any other retail trader who probably just learned from somebody on Twitter, they probably taught you support, resistance, right? Just one little line at the high and the low, right? And you'll notice if you've traded that way for some time, you've probably got stopped out a ton. That's just, kind of flows right into the concept of liquidity. If you understand liquidity, that's probably not going to be your stop or your support anymore. And I can't even tell you how many examples of this. Any time frame, any chart, it doesn't matter. But this is literally just, triggering liquidity. And, if you want me to get even more in depth with that, how does that even make sense, right? Why is there liquidity there? Sure. What had to have happened here? What had to have happened here? What had to have happened here? What had to have happened here, right? You don't need advanced knowledge on trading or price action to get an idea of what had to have happened here, right? Somebody had to go long, right? It's the only thing that we could possibly use to make sense of this move, right? So the algorithm's driving price higher off of that point. Therefore, we can look at it from the perspective of if whoever it is has enough money to actually move something like Russell, right? That's probably a substantial order. And with that, right, you don't necessarily need to take out all that big of a stop. Why? If you're taking out that big of a stop, that's a potential big loss in that situation, right? So the stop loss is going to be relatively close to the lows or where their entry point was. Now, by taking out that low, all you're doing is just generating liquidity, taking out those orders in order to give the algorithm some gasoline for that next move higher. And there you see it perfectly. And this is, anytime you see me type the emojis of a turtle soup, that's what it is. Turtle pokes its head out of its shell, rips it right back up. And that's what we're currently sitting at, right? So from this point, there's also a couple other things leading to that bullish thesis that I have, other than the fact that we have a bullish trend and we got into discount, specifically a discount bullish imbalance. We also got here, that would be a bullish breaker. Okay, and these are some of the most powerful setups that you're going to get in price action. I just put a video out on that as well. It's incredible, and there's a ton of examples on how effective the breakers can be in indicating trend shifts, right? So here's your low to your high, lower low, break up and through that high, and we would identify that level right here as your bullish breaker. Look what happens when price retraces back down into it. Ding, dong, gone. Okay, so here's your second. You actually have another bullish breaker here, and this is why I'm even more encouraged by this Russell setup here. So here's your low, high, lower low, break up and through. We did it. We got above it. Here's your bullish breaker, and we're leaving that second bullish breaker. So to me, this is really encouraging. Right now, from this point, we actually have no monthly imbalances overhead. So I am anticipating the rest of the summer to be very strong for the Russell. This doesn't necessarily mean that it has to go up to this 2,592 by next week over time, because despite not having higher time frame levels, there are smaller time frame levels. And while we wouldn't really look towards those as potential shifts as a result of that, I look at it as, okay, this could be a little bit of a speed bump along the way, and that's fine, right? We're looking at this from a monthly perspective. But then if you were to drop it down into your weekly, of very similarly, right, you had your break, low to your high, there it is. Here's your turtle soup move to get you down into discount. There it is. So far, so good. So on your weekly time frame, my model is about to complete. There's a bullish fair value gap down here, untouched. We call these breakaway gaps. Those tend to show you an even more enhanced bullish idea right here when these go untouched and left open. Think about it this way: if the trend is as strong as we think it is, and we're holding on to bullish levels, we're not mitigating any of these bullish levels, what is that telling you? That's telling you that this is pretty strong. And so far, so good. So going into next week, could we get a little bit of a standstill to start the week? Sure. But the biggest takeaway for me is by the end of next week, as long as price does not come down to this 2080.9 right there, that would create a weekly bullish imbalance, and that is really encouraging for us, right? And you'll also notice that as we make our way up, the next untouched weekly, remember I said there were smaller time frame levels, bearish imbalance, it's right up there and right up here. Okay, so over the last couple of weeks, you've noticed that I tend not to post these large cap tech names, and mainly the reason being that we're at all-time highs right now. There's no real way, in my opinion, and I would argue this with anybody, but there's no real way for me to forecast price at that point because we've never been there. There's no liquidity up there. You probably heard it all over the place on Twitter and whatnot, but people talking about price discovery, right? Well, if we're in price discovery, at what point have we discovered our high? I don't know. I don't know. Anybody knows, right? You're kind of just throwing darts and hoping they stick. So that's why I tend to avoid. I think Apple's going to 250. Huh? I don't know. Maybe if you're into standard deviations or not, or something like that. But I personally have not seen any indication that that's something that is a viable strategy for price targets. So it would also make me feel much more comfortable having an idea of what the draw on liquidity is, right? That's something I talk about all the time. And in my model, simply put, when we get into discounts, specifically a discount imbalance, my draw on liquidity, depending on the trend, right? So this is a bullish trend. I'm identifying those highs, and that's the completion of my model right there. All right. So like I said, Russell looks pretty good. I mean, let's bring it back over here. And let me make sure I'm clicking on this one. Yeah, there it is. Okay, zooming out very similarly, similar look as well. And let's just zoom here a little bit more. Boom. Okay, so buy side coming up right there. Okay, not all that crazy, not all that big, but you did create a big daily imbalance here. So if we were to shift structure, get some sort of retracement into this discounted daily range, at that point, I'd be pretty encouraged for some more expansion on Russell. So that's the first one. I know it's an index, but that's just overall, that kind of sets me up for what I'm looking for in particular. As we scroll through, Tesla's been one that I've been on for a while now. Kind of victory lapped this and actually took a crazy trade on Tesla yesterday. I'll continue here, but if anybody that's listening right now actually wants to hear, no, extended fib is not the GOAT. Mr. Bear, show me examples of that being true. Right. What's up there, Protein? Yeah, so if anybody wants me to recap the trade that I took yesterday on Tesla, just drop it in the sidebar. If not, I'm not going to do it. So, but yeah, here's Tesla. This is one thing on Tesla that is I'm watching. There it is. Okay. We still have 2-3 weeks left on this monthly candle. Will price close inside that monthly imbalance? It is kind of hard to believe that one shot we will shred our way up and through. But that doesn't mean that it can't necessarily happen. If this were to happen, that is extremely bullish. We're mitigating a bearish level with an imbalance of our own. Why is that so bullish? Okay. This is a bearish level. This is an imbalance to the downside, right? A sell side imbalance. Okay. Now, if we are making a buy side imbalance through a previous sell side imbalance, what is that telling you? That's telling you that the orders in this candle were enough to not only fill this inefficiency, but also create another one on the other side of it, right? So it's like, I use that like seesaw or teeter-totter example all the time. And it's like, all right, in a situation, let's say this original situation right here with this bearish imbalance, right? And you're sitting on one side of the seesaw and nothing is on the other side. That's how I would view an untouched imbalance. Now, in the situation that we currently have, over time, you would anticipate a sandbag going on one side, right? Or sandbags. And ultimately, you'll finally get balance when the weight matches, right? And that's exactly the way that I view these imbalances. Now, in this situation, it's not only are you putting enough sandbags on it to equal the weight of the other side of the seesaw, but you're going overkill now. You're throwing more and more bags on it so that now you are up in the air and the sandbags are on the ground. Okay, that's a big flip, and really encouraging. Now, personally, as who holds shares in Tesla, obviously I would like it to expand immediately, but as a realistic and I guess data-driven trader, I would not be shocked, by some sort of retracement on Tesla to get us deeper into this fair value gap here. To me, that would be pretty encouraging. I know this run is all good and all great, and everybody wants to blame robo-taxi delay as the excuse for price to go down. But when you're up $80 in 2.5 weeks, taking liquidity, boom, boom. This goes back to the first thing we said. Look what happens. Price sweeps liquidity, and guess what? Retraces. Okay. And at one point, we were all the way down here at 233. We were $35 off the highs, right? So, anyways, Tesla at this point, as someone who's holding shares, preferably we get that continuation move and run towards that 299. On the flip side of that, as someone who would like to pick up some options cons again, any retracement would be appreciated by me. So yeah, sure. Okay, D-Dot, I'll recap it. Sure. Here it is. Let's come on over here, and let's hope I still have the writing. Sure. Okay, so yesterday off open, I took Tesla, and look, and I'll break this down because this is important. So from your higher time frame perspective, way farther out, I'm so bullish on Tesla. I think Tesla's going back to all-time highs. To break it down into the weekly, I know we swept liquidity here. So if there were to be some sort of retracement, that would make sense, right? And of course, on the daily from the other day, here it is. That makes sense. We actually created a bearish fair value gap right here on the daily, right here. Okay. But, look what we got into. Daily bullish volume imbalance. Okay. So that gave me the idea. Huge ranges. I say this all the time to the group. I'll repeat it here. Huge ranges often create huge retracements. Okay. Huge ranges often create huge retracements. Why? Well, we know that price likes to come down into discount quite a bit. And if that's the case, discount is a real far ways away. Okay. And you also have another fair value gap here. I should just put that. Good. So now, following this, getting into this daily imbalance, I saw, and we also had the hourly and smaller time frames as well, but this trade really came from that daily and this hourly right here. Here it is, daily or hourly volume imbalance as well, right here. Okay. So when price gets into here, we're chopping around consolidating in this area prior to market open. My idea here was we were going to see what I would call, or I consider, the odd NAM model, which is essentially just an inverse Mando model. That's all it is. I don't talk about this one as much because I don't take as many trades using this as I do for a Mando model. But all this is looking for some sort of imbalance to form, okay? After a long downtrend, a long uptrend, waiting for the first imbalance to form to indicate to you that price from this point is likely to retrace back to the mean or 50% of your current range, okay, and get you back into discount of that range. So in this instance, we got into our hourly bullish volume imbalance and our daily, it's the same thing. Gets into here. This is all pre-market, okay? And you'll notice we get this wick right down here into our early morning, right as market opened. And this is an imbalance. There's no wicks on either side of this candle, correct? I know it's an ugly one, but this is this is like a stock imbalance here. You don't see this on futures because you don't have as many gaps, but this is an imbalance. No wicks on either side of the candle. We can view that as an imbalance, okay? Price gets into the imbalance, and ultimately I took my shot at that, knowing that my risk reward really was not all that big and my upside potential was, very solid. There was your run, and ultimately that imbalance was the indication to you that price was likely to retrace back into discount of your bearish range. Why are we bearish? Did we take out a higher low with this price run? Took out multiple lows in the process. By taking out those lows in the process, that shifts smaller time frame structure bearish. Therefore, I would wait for price to retrace up into discount of that bearish range, right? Why is that discount? If you're buying puts down here, you're overpaying, you're chasing. Okay. If you're buying puts up here, you're in discount of your current range, right? Why is that discount? Well, you now have an opportunity to secure more than half of the range while risking less than half, right? That's the whole idea, and that's the concept behind it, right? So yeah, beautiful. This one at one point, unfortunately, I wasn't able to snag it over 500%, but we tagged over 500% on this, and you know, the way that I played this as well was, it was still, I don't want to say tentative, but still you know, just overall cautious as I took profits along the way. You know, I had quite a few contracts, and I didn't want to get, there's no need to get bagged when they move as quickly as they do. You know, again, the end game is to make money, in my opinion. So preferably I'm gonna take profits along the way, right? I'm not gonna fall in love with this thing, but to have a couple extra contracts just for fun and let them run a little bit, that's been a great differentiator, because I can allow the trade to play out you know, to completion, versus trying to jump it and you know, get slick and try and catch every drop of the move. Hold on, sorry, my mouse died on me here. I'm just removing it. Hold on. Good. All right, we're back. Sorry. All right, so that was the Tesla trade. Again, all it was an odd NAM to the discount, right? Right when we get up into discount, all bets are off. Okay. You also notice the new week open gap was right here, another very powerful level in price reading. So yeah, that was Tesla. We did that one live as well, right? And of course, there's no call outs, because call out traders get smoked. You got to be an alpha. You got to learn how to do this yourself, or you're never going to be as good as you want to be. So anyways, that was Tesla, but just a couple other names. Oops, I had a green mark on that. All right, so we'll run through a couple more, and then we'll get into, or these are names that I've already done, but GME. So check out GME here on the weekly time frame. Okay, so if you know anything about my my model, my trading strategy, yeah, low to your high, you got your discount bullish imbalance right here. All good. Look how beautifully we held. Bodies held this bullish volume imbalance right here, down in discount. So I would personally like to see some expansion on GameStop. Now, with it, will there be speed in this? That's the ultimate question. I mean, you know, from this point, as we escape this previously bullish volume imbalance, still could be, but as we escape that, that's when I would like to see us pick up some speed for a move higher. I think this is far from over, this GameStop saga, and also just to walk through previous moves, and it just goes to show that when we get these rips on GameStop, you do not need to chase them. Right? Everybody wants to chase them, and ultimately that creates bag holders. But first off, low, high, lower, low. Here's your bullish breaker. Okay, break up and through, retracement down to it. Bingo, bullish breaker. There it is. Okay, next run. Boom, boom. What stopped us here? Okay, we have a previous imbalance as well, but also midpoint of this wick. Okay, smaller time frame level in the mix. Here's one more retracement down into this bullish volume imbalance, deep into discount here, and so far so good. Okay, so ultimately on GameStop, I would like to see some expansion next week for sure. I think here I'm going to pull up the options flow on this also. Let's just see if anything came in nutty on GameStop. I don't know if you could see it. Okay, so 4.9 million to the buy side. This is all throughout last week, and 1.4 million to the sell side. Anything unusual here on Friday? Not really anything all of that big. I got some October 40s came in, decent amount of money behind those. And yeah, nothing too crazy, honestly. October strikes look to be getting some love, but other than that, nothing too out of the normal. Yeah, what's up, Snaz? Hope you're good, man. With that, I don't even know if it was a hurricane or what it was, but yeah. So this is GameStop, just another one that I'm keeping tabs on. Going into next week, Chewy would be another one as well. This one slowed up a little bit on Friday, so, but did create a daily fair value gap here. So ideally, price would get into the daily fair value gap. Very similar. I know I hate comparing them to GameStop, but it is very similar to GameStop with these high wicks. And these are just smaller time frame levels in the mix on those wicks from a higher time frame perspective. But daily bullish fair value gap here. That's all good, all great. Should we also discounted on your weekly time frame with a weekly bullish breaker? Low, high, discount retracement, run up through previous high, retracement back down into your breaker. Also have a bullish fair value gap here. This turned out to be a pretty good trade for me this week also. Now you have relative equal highs above right there, 39.10, 40.78. What's the relevance of relative equal highs? Two pools of liquidity. Previous one did not get taken out, okay, with this move, but also no higher time frame imbalances in between. So if price were to get up to that 39.10, I would anticipate price to kind of slice right up through and go get us at 40.78. So couple weekly levels that we're still banging around in the mix, but this high wick kind of mitigated them for the most part. These will all be second attempts at these imbalances here. Let me change the color. Here. See, there were a lot of imbalances, but that high wick took care of some business. Okay. So yeah, Chewy's another one. Moderna turned out to be an awesome trade for me last week. This got into a weekly imbalance, so I'm a tad bit hands off right now. Yes, we got our discount, retracement into a bullish imbalance and bullish breaker. That's great. Higher time frame bias is still higher. I'm just, at this point, I'm a little hands off due to the fact that we got into this bearish imbalance for the first time. Do we reject? Go sweep these lows down here at 114.05 for a turtle soup type move, gather more liquidity for that next move higher, and ultimately that could be the big one. That's really what I'm looking towards for Moderna. So with this week, I'm a little hands off. I'm going to look elsewhere. Mara, awesome closeout to the week, forming another bullish volume imbalance here. This name has been stuck in the mud, slow motion, but high hopes for this one. Nothing has changed structurally here, and you have multiple sets of buy side here. And even if you wanted to look toward your more recent bullish run, there it is, your low to your high to take out this high. Here's your discount retracement. So ultimately, I'd like to see Mara expand into next week as well. Soundhound was phenomenal. There we are. The dogs are woofing. Soundhound was one where we've kind of been talking about it for a while throughout the duration of this breaker, and it just really turned into a waiting game. And it was one where I didn't play options on it. I had shares, and it was more of a, oh cool, I made X amount of money, time to pour a couple bucks into good old Soundhound here. And when you get a move like this, because nothing changed structurally, right? If you have all the time in the world trading shares versus options, that's something that you can do. And turned out to be an absolute monster this week. I don't even know what we're up $2. I mean, jeez, what a week. Seriously, what a week, almost 50%. So, and at this point, you have this bearish imbalance. This would be another situation where, like Russell, do we flatten out this week and create that weekly bullish fair value gap? That would be cool. I would take that. But, ultimately, I think I have a good idea of where price is going on Soundhound too. So with time. Now, onto Affirm. Affirm's also, look at this slow consolidation to the downside. I call this controlled demolition, when you're making your way lower without creating higher time frame levels. Turtle soup here. I really wanted it here, but it's okay. Can't always get what you want. But we turtle souped here, so not bad. We are in discount, deep discount of a bullish range, and every time frame this kind of checks out on, other than maybe your hourly. Let's just check the hourly for, no, even our hourly got our shift. Yeah. Low, high, discount retracement, bullish imbalance, run for highs, cha-ching. There you go. So even on the hourly, the meta model plays because there's nothing like it. And look, it's not cocky, it's not conceited. I just don't know how many examples I have to show everybody of this being as precise as it is to get people to see it. But yeah, so basically Affirm, really, really nice. All time frames. That's really, these are my top 3 for the week. Disney, I should move Disney below Boeing just for this, because Disney's got a little bit lower. I could potentially seeing it dip for me. So let's see. We're coming on over here. And yeah, let's pull up Boeing next. Boeing's a really, really interesting one. I think the sentiment on this one is at all-time lows. Yeah, thanks. Yeah, if you guys would like the stream, share it if you're on X watching it. Appreciate that. I'll do these as long as people like them. When you guys stop liking them, I'm done. Caleb, good close on that candle too. Caleb, sorry, I just saw that. Which one were you looking at? There. But yeah, let's go on to BA here. And again, this one, sentiment all-time lows, setup. Ain't that something? It's pretty nice. Now look at last week's low. I just want to show you guys how precise this is. You kidding me? It's a bullish fair value gap here on the weekly. Look how perfect that is. Okay. Now come on over here. Go to my alerts tab because I got a lot of alerts. Now look at the alert that I had set for Boeing. Beauty. Okay, so that's just the way that you can go about it. Do all the work over the weekend, set the alerts, and have fun when the week comes. But there it is, weekly bullish imbalance right there. You have a low resistance liquidity run, potentially, with relative equal highs up here on Boeing at 92.63 and 96.18. Okay, above that level, look in here. Controlled demolition, no imbalances on this downside. Okay, this imbalance has been filled. This is an untouched bearish imbalance. I don't have it shaded because I don't want this entire thing to look shaded. That's not all that optically pleasing, but yeah, Boeing looks good. Deep discount here on your weekly time frame. You got into your bullish imbalance and respected it to close out the week. So would like to see Boeing get going as well. On to Disney. Disney as well. Here's from your weekly perspective. We also have a monthly. I'll just show you guys because there it is. So my monthly chart, nothing saved on it. That's really annoying, but all right, whatever. Here's a monthly fair value gap that we did not get. So ultimately, I kind of want us to wick it and then pop back to close out the month inside this bullish fair value gap here. Okay, this is discounted on your most recent price run. Low to your high that took out this high right here. All setting up real nice. Okay, low, high, lower, low, break up and through. You have your monthly breaker as well. So yeah, Disney's another one. I think you can go a little bit lower. I have my alert set a little bit lower here into that monthly fair value gap. That would be ideal. And this one has a few more imbalances to work its way through, but Disney tends to not be the speediest of moves, but that's okay. Now this is where it gets a little nutty. So let's come on over here to Upstart. Okay, here's our guy. What does Upstart do? What did you say? So yeah, Upstart. This to me can get a little nutty. Okay, we are deep discount consolidation for a long time. We got our turtle soup higher time frame sweep. Okay, you have buy side first level at 30.17. You have your next, these relative equal highs up here at 38.01, and ultimately the completion of the smaller time frame Mando model at 49.62. The overarching Mando model completion would bring you to 72.58. I know these are big numbers, but here I'll explain. So just like I traded Tesla and just how we walked through that trade, look at the overarching range on a name like Upstart. Now, do I think Upstart is like this great company that's going to like make waves throughout the future? Probably not. No, I don't. But I personally feel confident that knowing that price likes to retrace up into discount of these bullish range or bearish ranges. I'm sorry. This is a bearish range. We took out all-time lows with that price run. Okay, we are so far away from 50%, right? And if you say, "Oh no, that's way too far," there's no way. I would say, okay, I'll show you just a few examples on how I would fight that idea. Okay, let's pull up our good buddy over here in Carvana, another one that was smashed by me. Okay, so where's 50% of this overarching range? This is 376 all the way down to $3.62. Okay, it's a big run. And by the way, Mando model complete on Carvana here. And I drew this when go back and just do at Mando Trading money sign CVNA. And you'll see when I drew these lines, that was probably back in May. So here it is. There you go. And it's all tweeted. So, but there's your Mando model completion right off 50%. There's your run for highs. Okay. So, yeah, buy side at 150 here, but also look how close we are to that 50%, right? So that's my idea with Upstart as well. I don't buy into this, and I don't base trade solely off the fact that something is like extremely shorted or anything like that. That doesn't really matter. That's just a kind of a cherry on top of a trade idea for me. Very similar to options flow. You know, I'm not going to specifically trade off of the options flow, but I will use that as a scanner, and I will use that as a just additional layer on our overall thesis. Now, if I were to come over here and just, you know, I'll post the flow later when I post Upstart, but the Upstart flow for the December 17.5 was insane. 2.4 million plus 424,000 plus 587,000 plus 591,000 plus 175,000. I really think Upstart can get nuts. That's all. The one thing that was holding me back ever, I mean, I do have Upstart, so just to be fair, but the only thing that was holding me back was were we going to sweep these lows at 1986 prior to that expansive, insane potential run, right? That was the only question I had. That was it. But yeah, and we had a bullish breaker down here as well. I was curious, do we see that? But the monthly also showed you that we held on to the monthly bullish imbalance perfectly. So I'm really upset right now that literally all of my monthly charts got canned. I don't know what happened here. I know I saved them, but okay. So there's your monthly bullish imbalance, and we're leaving it right now. So notice how controlled demolition. There is no imbalances up here. Our next imbalance isn't until here. So yeah, Upstart. Again, that's just one that was a little sketchy for a bit. A lot of consolidation, took a lot of time, but it seems as though things are starting to line up on the all time frames, really, not just the higher time frame. So, but that's Upstart. Now, one that I'm looking at it from a bearish perspective here would be Celsius. So where is it? Hold on. Let me pull up. This is what, every quarter I like to just freshen up, right? So the new quarter started a couple weeks ago. Here's CELH. Now, this is what I saw on CELH, because you might say, well, Mando, we got into discount to your bullish range. Like, why are you not looking for more upside at this point? Just from looking at it from this perspective here on the quarterly time frame, I think price can go down into this quarterly imbalance right here, get us deeper into our monthly discount, which is, because again, low to your high. Here's your discount retracement. Bullish imbalance is right here. There's your run for high. So the Mando model completed. Here's your next one. Notice how there was no 50% retracement. Okay. Because there's no 50% retracement, that's telling me that the range isn't set. Now we've set the range. We're in discount. Okay. But here on the weekly as well, you formed a bearish fair value gap right here. Okay. And like I said, I know we're in discount. I know we are, but our higher time frame would suggest a lower retracement into one of those imbalances. So that is Celsius. Just one that I think we're going to head lower on. We don't need to look at the quarterly anymore. That's fine. There we go. Okay, so AI. AI is another one. They can get a little nutty here too. Okay. Low to your high, discount retracement, bullish imbalance. Look how much consolidation and how much time it took, right? We are deep discount so far, making moves. Bullish imbalance from a couple weeks ago. This was tweeted. There it is. Respect for it and bounce thus far. All of these imbalances up above have been at least tapped and filled or filled at this point. So buy side is 38.30 and 48.87 is my ultimate goal on AI here. And again, this is another one with just a totally massive range from its all-time highs. So that would be AI. Just, again, another one that I like. Rocket Lab, just type in at Mando Trading $RKLB. You'll see the date of the tweet. 614 is the first target, but this is a long-term hold for me. Just absolutely beautiful following our turtle soup, right? Took out retail support. You guys all sold to me, thanks, and we took off. So that's Rocket Lab. Looks real good. Net as well. Net is another one. I think this is going to take some time, but ultimately, I have an idea of where it's likely to go. Respected bullish imbalance here on the weekly. I wanted it a little deeper into discount for re-ads, but I don't think that's going to happen. Now, SoFi, this one really it ticked me off the most because I was in SoFi for a long time waiting for this type of run, and I probably was a part of this and did not get all the way to where I wanted it to go. Smaller time frame level caught you up, just created more consolidation, unfortunately, but we took out this higher time frame low. This dates back to November of 23, and look at the reaction off of that level. Beautiful. So 743 buy side. You got a couple more buy side targets without any real big imbalances in between. So SoFi, I think looks pretty good. A little late to the party. Probably not one that I'm going to play, but it does look pretty good. Now, this is where I stopped before I wanted to get to the stream. So these are going to, be me actively doing them. So I just wanted to take a look. So UNH, United Healthcare. All right. Yeah, check this. Low, high, lower low, break up and through. Check this. Bullish breaker. Held, up and through. This is another one. I think United Healthcare can do well, and for whatever reason, this tends to do well when tech does bad. So if we are to see some sort of retracement on the big board, there are a lot of upside targets for liquidity that UNH has here. I remember all the way back to that earnings report that things went nutty. I was like, yeah, I just wanted to take 436, and when we take 436, I'll feel real good about this one. And of course, pennies away. So I missed out on that round, but this one looks also pretty solid, closing above previous bearish volume imbalance. So look at the reaction, right up into it, rejection, right back up off the breaker. So UNH is another good one. So there are actually quite a few. ARC is actually another one that's pretty, interesting to me at least. And again, another massive range name, okay, on these beat down, highly speculative growth names, right? 50% is way far away, but check this current Mando model setup, low to your high. Here's your discount retracement into your bullish imbalance. Also weekly bullish breaker, and so far so good, giving us some sort of expansion. Got one untouched bearish imbalance, and other than that, 54, 52 buy side. Here you'll see just previous Mando models complete from your low to your high. Why? We took out this high with that price run. Here's your discount retracement. There's your bullish imbalance. There's your run for highs. Beautiful. Now here's your little turtle soup situation where we took out a low, okay, in the inverse direction of our overarching bullish trend. There's your run for highs yet again. So that would be your second completion there. So yeah, this is ARC. I mean, like I said, we have one intermediate level. The range, potential win isn't all that great. What is that, like $8? My downside risk really here is like $5. So it doesn't really, line up perfectly for like a smaller time frame trade just based on risk reward. But if we buy into the idea that buy side here, 54, 52 is the likely area for this to go, that would be, it's obviously the target. So, but that's ARC. Now, let's do a couple more and then I'm going to get off. But Zscaler also. This one is really whack. So check this. Okay. Okay. And just for anybody who's curious, I use the fib tool. All it is measurements. You're never going to catch me trading Fibonacci off of with nothing else, essentially. Okay, there has to be an imbalance to coincide with whatever specific fib you're looking at, or you're going to notice that it's not going to work. Okay, it's just how price works. So yeah, I do not trade using fibs. It's all just measurements to map out the discount and premium of a specific range. That's it. Okay. So here is Zscaler. Look at the overarching Mando model set. This is over, 4 years. But here's your low to your high. There's your discount retracement down here into a bullish imbalance. I'll map it so you see it. There it is. Okay, there's your run thus far. So far, so good. Here's a little bit of a discount retracement on a smaller time frame, right? From this low to that high. Took out numerous highs in that price run. There's your discount retracement into this bullish imbalance, and so far, so good. So, yeah, this could be a nutty one. I bet you if we went to like a yearly time frame on this, it's gonna look crazy. Let's see. Where's my yearly? Here it is. Yearly outlook. Ironically, I have Tesla, low, high, discount retracement, bullish imbalance, run for highs. Okay, where is it? ZS. Yep. Low, 2-year high, discount retracement, bullish imbalance, run for highs, question mark. Aha, that's a beauty. So yeah, Z-scaler is another cool one too. Let's see, what else do we got here? Okay, so Caleb, you're talking about on that on SoundHound. Yeah, that's encouraging for sure. Hank asked, do you still watch fair value gaps after they've been taken out by price? Not necessarily. So I guess here's the way I would explain this. 1080p, yeah, I think this is the best it's gonna do. It's gonna be. I just use StreamYard as the streaming provider here. Depends on what you're watching on too. It's much more clear on the phone for whatever reason, but I can try and zoom in more. Yeah, Caleb so far has been annoying. But yeah, so when do I like remove fair value gaps? So basically, if they've been mitigated, meaning price has gone through them, whether it's a bearish fair value gap and price has gone up through them, or vice versa. Oftentimes, if we do not create an imbalance through it, I'll leave it on just for a little bit to see if we can get that inverse fair value gap set up. Previous resistance turn support, or previous support turn resistance, right? That's a common, basic trading term, but that's the only way that I would, value them following them being taken out. I mean, yearly is not going to be all that great. For an example, let's see. Here, let's see. So we took out this fair value gap on Zscaler. Okay. The reason why I wouldn't leave this on as like some sort of inverse or inversion fair value gap here is just because we created one in the process. So it would just be gone for me. Now if price were to retrace back down into this imbalance, I would not value this whatsoever. Why? Price already filled it twice. So I don't really have any, I don't really mind. So that's that. So let's see. Sure. Okay, I'll do Intel and I'll do NVIDIA. Sure. What's up, Hazed? All right, let's do it. So obviously NVIDIA, we all know what this monthly chart is going to look like here. Where are we? I usually have it at the top. Oh, here it is. Okay. There's NVIDIA. Okay, so obviously total price discovery. So at what point beyond the all-time high? Your guess is as good as mine because you're just literally guessing. So now let's come on over here to weekly. Here, very similarly, we created a bullish volume imbalance higher. Okay, notice where our rejection point was. Okay, not even above 50% of the wick or highs of that smaller time frame range. So that doesn't mean that we can't go higher from this point, but the smaller time frame levels did get in the way a little bit. This bullish volume imbalance is important. You ideally like to see price hold that if we're going to make that next run up to all-time highs again. But for me personally, this is just, it's not really even close to my model at all. In terms of where I'd like to specifically buy things. See, this is a bearish order block here on your and I don't really mark the order blocks, but it's there. But that to me, I prefer discount. I actually tried to shorten a video a couple weeks ago off this bearish fair value gap here, and first cons did well, and then the quote unquote runners got ran over. So I'm not jumping in front of this either, but yeah, so that's NVIDIA did prevent the formation of a daily bearish fair value gap there. So in short, I personally just don't have interest in this due to the fact that it is not near discount at all. But it could go, it can go up to all-time highs too. That would just signal this range isn't set, and that's fine. No big deal. But that's NVIDIA. Let's do Intel. I have not looked at this name in a really long time, so apologies in advance. All right, well, don't worry. Everything on my monthly got wiped anyway. Here is Intel. Turtle soup. Very nice, very nice. It's a really ugly candle here. See, this is okay. Let's see if we can get some funky stuff going on Intel. Let's hop in the time machine and let's head back to 1989. Okay, yeah, let's do it. Hold on, let me get a little. I got some sort of sound effect for that, right? Where's the? Yeah, here it is. It's like some weird. All right, now we're going to 1989. And this is why the Mando model is better than everything else. Sorry, not sorry. Just it's not meant to be cocky or conceited or anything like that. But prove me wrong, man. Prove me wrong. Okay, so let's go through. Let's actually go back to Pennyland. So let's see the initial date of this. Okay. All right. So let's go back to 1992. Okay, I was not even a thought. Okay, so here we go. Let's see. We can do even more of them. Ready? This is gonna be fun. Ready? Low, high, because we took out this high. That's our shift in structure. Here's your discount retracement. Here's your bullish imbalance. Here's your run for highs. Mando model complete. That's one. Okay. What was the price run that took out this high right here? From that low to that high. Discount retracement. Bullish imbalance. Run for highs. Mando model complete. That's two. What was the price run that took out this high right here? This low to this high. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. Mando model complete. Here's your next. Here's your low. Here's your high that take out that high. Here's your discount retracement into a bullish imbalance. There's your run for highs. Come on now, man. Really? Come on. Are you kidding me? This is 1992. Come on. There it is. Low to your high. No discount retracement. What does that tell us? The range simply is not set. That's fine. That's no problem. No problem at all. Okay. So what is that telling us? That's just not a trade opportunity for me. That's all. That's all that is. Let it expand. Who cares? It's going to come back for us eventually. Here we go. Whoa. And you can literally go to each red candle and just see if we got a retracement off of that red candle. And we finally do right here. Okay. There it is. Okay. Here is your discount imbalance. Here's your first. Oh, sorry, that wasn't the one. It's this one. Discount bullish imbalance. So far, so good. Where's the Mando model on a, let's see the scale of this. Where's the low? From 1992 to 2000 flat to 2025. I don't know. But yeah, so at some point or another, I think 7581 is going to come on this name. But as you can see, this is really, really drawn out. Okay, but let's go to like a more recent, smaller time frame. Okay, so right over here, let's see, where's that first shift in structure here? Right over here. That's good. Okay, so from your low to your high, discount retracement, bullish imbalance, run for highs, check. Another one complete. Okay, here's your low to your high. Here's your discount retracement. There's your run for highs. Okay, here's your turtle soup. Ayo. Oh, this is a good find. Relative equal lows. Dangerous. Doesn't change much for me though. There it is. You still got your run for highs. No problem. No problem. Here's your low to your high. Here's your discount retracement into your bullish imbalance. There's your run for highs. These are all smaller time frame, of course, inside our overarching bullish trend. Okay. Here's your turtle soup move following the expansion of your range. Turtle soup, sweep, bounce. Okay. The only thing that I kind of hate about this right now is that we don't really have much to work with here on the monthly time frame. Okay. We got this imbalance that we've respected, so that's pretty good. The most bullish thing that can happen for Intel would be to mitigate this bearish fair value gap. But until that point, I really have no interest looking for highs just yet. Okay. This could very well reject this monthly bearish fair value gap right here and sweep some more lows. That would be terrible, but it's a possibility. Let's just see if there's anything on the quarterly that would give us any more indication on this. Not so much. There's your turtle soup move. We're in the process of creating what could be a quarterly imbalance, and you don't want to do that either. Where are we? Yeah, we're stacking relative equal highs here as well. Yeah, so ideally, if it were me, and it's not, I'm not really interested in this name, but I would want to see this mitigated. So up to like 40, 57. If that can get mitigated, you'll probably create an imbalance up to that level, and you can get your retracement down into it, and then hopefully, ultimately, get your final run to complete that. What was it? 1992 to 2000, that 8-year Mando model setup that's taken 24 years following that to play out, right? These happen from time to time. We did Boeing. We went back to 1969. We did Facebook's and actually an interesting one too, from like IPO in 13. It took like, or I forget when it was the IPO, actually, maybe it's 2008, I forget, but it was like a 13-year run, and that COVID low, that's all it was. Go back on NASDAQ. Every bear market is just a discount retracement into a bullish imbalance. You don't believe me, just do it. You'll see. So, but anyways, let me go check this chat here. It's pretty cool, huh? Yeah, listen, you're going to feel so much more comfortable trading and so much more comfortable reading price action when you have confidence in doing so. When you go back in time and you can chart this stuff from a really long time ago, that's only going to make you feel more or confident in your model or your setup, whatever it might be, right? On Intel, can you look at lower time frame odd NAMs after the 2000 dump? All right, we'll go back to 2000 for sure. And then Strat just said, where can I learn more about what you're teaching? What are the concepts a beginner like me needs to learn? Sure. So a lot of it is just free on YouTube. Okay. The most important to me is, if you've seen this video, you can kind of put the Mando model video on just leave it for after the 3 conceptual videos. Concept number 1 is the idea of liquidity. Number 2 is the idea of market structure or trend, right? Everybody talks about that. They can't even define a trend, these people. Okay. And 3, imbalances. All 3 of those melted together in confluence with higher time frame, what's the word? Context, higher time frame context. Okay. You need higher time frame context, because without that context, it's not my model. You need to have that higher time frame context in order to transfer it down to lower time frames. But I have a video on that too. And then we have the Discord. We got like 300 people in there. We do live trading. We've been doing it every day so far this summer. I don't usually do that, but probably going, after the next couple months, we'll do like 3 days a week. It's just too hot for me to go outside, really. So, but we'll probably do like 3 days a week, and then we do live calls every night to reinforce the ideas. So, but that's that. So, so lower time frame odd nams rather on 2000 as trade opportunities. Sure. Okay. So let's go to 2000s. So, here, Cajun. Well, you got one right here. I mean, and this is monthly too. So if you're to go to a smaller time frame, you're going to find much more. We can do that also, but we'll do that next here. There's your odd nam. First imbalance forms, price retraces into it, dumps into discount. So that's from a monthly perspective. Let's look from a weekly. See, look, that's your turtle soup move right there. Bing bong. Okay, let's come on over and let's go back over here and let's see. What happens when we shift structure? What is one staple in structure shifts? Anybody in the group? If you can't answer this, I'm going to be upset. What is one thing that tends to happen when we shift structure? And I'll give you a hint. Breaker. That's why they're so powerful. That's why I did a video on it. And some clown tried to fight me on the idea of breakers. And I said, okay, shoot me a message. I'll send you every example on a breaker ever. And, crickets at that point. So, I'm just waiting. And I won't get offended if somebody says, oh yeah, that's bullshit. I'll just prove it to you. And if you still don't want to buy it, then, nothing's going to change your mind. But I'm just showing you don't see any dumb indicators on my chart, do you? Nope. You don't need them. Never will. But look at your breaker, right? Your breaker was formed right here on the move down through that low. And that would be the signal to you as a trader that we could go see discount now. Okay. Check that. Bearish imbalance right here. Okay. Gets you deeper into discount. There it is. Oh, well, it went above the box, right? Just wicks, no bodies. And also, when we take entries off of imbalances, or when I take entries off of imbalances, where's the stop loss? Above the high of the candle that created the imbalance. Everything is mapped out. Everything is structured. So these couple of weeks that just kind of chopped around in here, that has no impact on my overall trade. Zero. Nothing changed. Right? All right, so occasions, is that helpful? Yep, breaker with imbalances. Cha-ching. There it is, Armius. Good. Leave behind a gap. You could leave behind a gap. Yep, the breakaway gap. Hank, you learned that in whatever I've been on here for, 30 minutes. Yep. It's telling you something by doing that, right? Gaps up and down. They're telling you something. Gaps up, showing you urgency to move higher, right? Go on any chart, you can look at that. Gaps down, showing you urgency to move lower. We can use that gap as a level. That's called a volume imbalance, right? It's just there's a lot of like little clues and such, right? And of course, when you break this down, right, on the higher time frame, it's so much easier than on a smaller time frame, because on the smaller time frame, it's really condensed and it moves quickly, right? And that goes for especially if you're trading short dated contracts or scalps or anything like that, right? It makes it much more difficult. But that's why having the higher time frame context is so important, right? You feel like you're on sides, right? For me, example, type in the search bar on X at Mando Trading, I like this low. You're going to see when in October when I completely nailed this low. And then from there, that doesn't necessarily mean I bought long, like a long contract here, and I've just been sitting in it the whole time. No, that means that throughout the entirety of this run higher, I felt no problem with, playing to the long side, right? I feel like I'm on side. I have a clear-cut draw on liquidity. Problem is now we're in price discovery. I don't have that upside draw on liquidity anymore, right? But let's see. Never checked the live or joined Discord. I trade fair value gaps on hourly typically and swing for a few days. Nice, man. Yep. Your structure will be putting structure in the mix there will be really helpful. Can you peep ExxonMobil if you have a spare second? I see daily structure building out of weekly OTE. Looks like power of three accumulation, manipulation, distribution. But the accumulation was a downward channel. Manipulation was a dip into the weekly OTA, working on reclaiming the lower time frames. Sure. So we actually were talking about ExxonMobil a lot this week in the group. So right off the bat, this was my, basic explanation. So right off the bat, looking at this from a higher time frame perspective, this does not meet the requirement for me, right? I like when things are in discount, specifically discount bullish imbalances. That's, going to give me the best bang for my buck in that situation, right? So it doesn't necessarily meet my context on a higher time frame, but that does not mean that it can't go higher. Okay, everybody might be different. You might be different than me. So we look at this as we're inside this monthly bullish fair value gap. Good. Okay, come on over here to our weekly. Okay, discounted on the weekly, not quite the monthly, but there it is. You got your discount retracement into a bullish imbalance. Here's your first bullish volume imbalance here. Notice how there are no imbalances on this way down, right? This is the only one, and guess what? That was filled. And also, what is this telling you? Gap down, showing you urgency to go where? Lower. There it is. Just another example of it, following a sweep of liquidity too. First imbalance forming in a range. What is that telling you? We're going to see discount. Odd NAM complete. There it is. Okay. So we did create just a tiny little bearish volume imbalance here on the weekly. That's all right. We held this volume imbalance. So basically the way that we went into it with the idea that this imbalance was crucial. If we held that gap up or urgency to move higher, I felt pretty good about it continuing long, which it did, right? But we also had this trade mapped out just in case we were wrong in a way where it was about a $3 downside risk for a potential like 15 or something to the upside, 14. So that's ExxonMobil as well. I think CL looks pretty good, and that's the futures for crude oil. Here, let's come on over. Here, CL looks pretty good. I mean, you got this fair value gap here that just formed a couple of weeks ago with these relative equal highs. I know you might say, what, there's $6 in between. There's no imbalances in between, and you have also relative equal highs here. So ideally, this would be cool to get some sort of retracement into this bullish fair value gap here, and then send energy. So I hope that helps. Yeah. Yep. Yeah. CL does. Yeah. So that's why like it's about $3 lower, but that fair value gap would be pretty cool. I can look at Ulta there. Sorry, I for Donnie, I think you said Ulta. I'll do Ulta, and then I'm gonna probably bounce. Yeah, nice. You smacked ExxonMobil. Great. CVX looks better than Exxon. Yeah, I think Oxy does too. But yeah, let's look at Ulta for Donnie. A whole lot of relative equal lows. Yeah, no, this would not meet criteria for me at all, really. And also taking out that low, what does that create? High, low, higher high, break down below. Look at all these relative equal lows. And we didn't get into discount either. Yeah. Let's see any more monthly fair value gaps on Ulta. Yeah. You have a monthly bearish fair value gap here. So I think you can get up into that. But from there, don't have high hopes on this going back to all-time highs just yet. We got this as well. So yeah, not all that hot on Ulta right now. So anyways, that would be Ulta. So all right, I think I'm donezo here. So hopefully this was helpful. Again, I'll do what's it called? Do the morning show every day. Love to see you guys there. That is from like 9 to like 9:30, and then I hop over and do live trading in the group. So yeah, that's that. What else? Is there anything else I wanted to bring up? I have some charts out today. Appreciate when you guys like the charts, right? People message me and be like, "Yo, I saw your chart on this," and I'm like, "Yo, just drop a like, man. I just want to see that somebody's actually seeing the work that I'm putting out, you know." Also, use these down days as ways to practice, right? Don't take this the wrong way, please don't. But to be honest, I don't feel like I really need to like do this, right? I think I'm at a point now where I can take an hour. All it takes for me would be an hour to map out 5-10 tickers that I'm going to be looking at for the week, right? But if you're newer, it might not be a bad idea to just spend some time. If you got it, and you really want to get good at this, just go back in time, right? Learning those concepts first, so important. Once you learn those concepts, things will become a lot easier as a result of that, right? And if you're starting to see if you look at a chart and you're just like, I have no idea what I'm looking at right now, that's probably a good indication that you should, hey, watch some videos. Maybe not even mine, right? You can watch ICT videos too, but it'll help you feel confident in what you're seeing, because once you learn it, right, that's first understand the concept, then be able to go back in time and see it in the past, right? I know that doesn't help us, but if you could see it in the past, that's great. And if you can't see it in the past, there's no way you're going to see it in the future or anticipate the move and be able to trade it, right? So you really have to be able to see it from the past. And then you're going to build so much confidence that you're going to be able to start anticipating where price goes. You're going to feel much better about yourself, and you're not going to be sweating trades out as much. So anyways, that's all I got for today. So I hope everybody has a good weekend. I'm going to be posting a bunch of charts if you want to check them out, and we'll catch everybody soon.